thank you to our dear friend for sharing this perspective we're about to unpack.
Yeah, absolutely. Our mission today is to sort of explore this very firm viewpoint on analyzing markets, especially crypto, which, is famously volatile.
It really goes against the grain, doesn't it?
Yeah.
Suggesting maybe news isn't the be-all and end-all for decision.
Precisely. The idea is there might be something more direct, maybe more reliable, embedded in the market's own movements.
Okay, let's get right into it. The core argument from our source is, and they're quite clear on this, that technical analysis is the most superior form.
Yeah.
That's quite a statement.
It is strong, yeah. But the logic they present is, well, it's compelling. It's because technical analysis reflects real action.
Real action.
Yeah. Meaning people actually buying and selling. You know the saying, put your money where your mouth is. That's the essence of it. It's not just talk. It's actual commitment of capital.
Okay, so it's about observing what people are doing, not just saying.
Exactly. And our source believes quite strongly that every single candle on a price chart holds all the info you need.
Right, those little bars on the charts that show price movement over time.
Mm-hmm. They argue that candle tells you everything, what regular folks are doing, what the big players, the whales are up to, and crucially, where the so-called smart money is buying or selling. It's all supposedly right there.
So if all that's in the charts, what about news, fundamentals, all the stuff we usually hear about?
Well, this is where it gets interesting. The source is pretty dismissive, frankly. They say news and fundamentals are far less useful for actual trading decisions.
Ouch. So just flashy headlines and attractive clickbait.
That's the quote, yeah. They suggest they're only helpful in very small instances. It's almost a warning against getting swept up.
And they also mention a common trap, don't they? That most people tend to be bullish at the tops and bearish at the bottoms.
Right. Which, if you think about it, is often fueled by that news cycle hitting peak hype or peak fear exactly when the smart money might be doing the opposite.
So the charts, the real action, potentially offer a way to avoid that trap.
That's the idea. The charts show the buying and selling before it becomes a sensational headline, or perhaps despite it. To make this more concrete, they shared a specific analysis.
Ah, the Veen analysis you mentioned, for a 1D chart.
Exactly. Vin analysis seems to be their internal framework for reading these daily charts, their yellow charts maybe, and the status.
The status was clearly bullish.
Yeah.
And the key observation was we got an impulsive breakout.
Right. An impulsive breakout that's a really strong, sudden move up shows real buying power coming in.
But here's the interesting part for me. Despite this strong bullish signal, the analyst was actually waiting for a correction. Why wait? Why not just jump in?
Well, that's discipline, isn't it? Even with a strong signal, technical analysis often involves waiting for a better entry. A correction is like a small dip or pause after the big move.
Ah, okay. So waiting for that pullback to potentially get a better price and reduce risk.
Precisely. It's about managing risk, even when you're bullish. And based on this, they laid out very specific price targets.
Yeah, and these weren't just guesses. They gave clear levels. Upside, if we continue to pump, next target, $0.25.
Pump, just meaning, price keeps rising strongly.
And the downside protection, if we get rejected, first target, $0.99. Rejected meaning the price stalls and turns down.
See how specific that is? It provides clear boundaries based purely on what the chart structure is suggesting. It's very action-oriented.
So stepping back, the big takeaway here is really about focusing on the chart itself, the raw buying and selling as maybe a clearer signal than the news noise.
I think that's the core message, yes. It's a perspective centered entirely on actual market behavior, on that real action.
And for you listening, it's worth considering, perhaps, how this focus on chart patterns and real action might change how you think about gathering information, whether it's crypto or really any market.
It definitely makes you question what signals you're paying attention to.
It leads to a final thought, doesn't it?
Yeah.
If every candle truly contains all the necessary information, what does that imply about all the other information we chase? How much of it is genuinely useful and how much is just, well, noise designed perhaps to make us look away from the charts themselves?